Hello, I'm Brent Wilsey with MDLZ Chase Wilsey. We're from Wilsey Asset Management, and welcome to today's edition of the Smart Investing Daily Briefing. Well, today we're talking about don't fear market volatility. This is one thing that really scares people. I think, oh, it's terrible and so forth. So I went back about 6 years and show you what happened over the past 6 years and talk about this a little bit. July 2nd, 2010, we had a 16% drop in the market. Why? Greece. Oh, Greece is going to default and they're dead. How terrible it was and so forth. I kept telling people, Greece is the size of New Jersey. It's not going to affect the United States. But everybody was concerned about it. Market dropped 16%, came back. October 3rd, 2011, market dropped 19.4%. This was terrible. The United States lost their AAA rating. The world was coming to an end and our debt was going to default and so forth. We recovered from that.
Yeah, and then again, in June 1st, 2012, we saw a 9.9% drop. And this was what we called the Euro double dip, which is kind of, oh my gosh, this Euro thing is just so scary, Greece, and all these concerns. But you know what happened? We went out and bought those products from Europe. They did okay. Stock market recovered. Then again, August 25th, 2015, down 12.4%. Why? Oh, global slowdown. China's doing this and that. And all these crazy things, but guess what? The market has done extremely well since then.
Yeah, since then, since about the last 6 years, the market, the S&P 500 is up about 90%. Now, this doesn't mean you go out and pay a high price for some crazy companies you think are going to do great. You still have to do your research. You still have to buy good value companies, but it shows you if you invest properly, don't worry about these movements or crazy things that happen. They're a short-term thing.
A lot of times you forget about these short-term occurrences in the grand scheme of things. Unless you pulled it out the bottom, then I'm sure you're like, oh man, back in 2010, this happened. But you know, I kind of forgot about it.
Yeah, and that's what I'm saying. You forget about this stuff. And so I'm kind of focusing on look at 2022 going out now, so you should be looking at. So let's talk about a company that could be a company for 2022. Mondelez International, another food company, keeping with our food stocks for the week. We do see they were up and they had a big drop here. We don't know if it's a spin-off or whatever. If you buy this company, make sure you understand it. Came way up here. So let's look at the numbers now to see if this is a good buy now or not. Mondelez International, they sell things like Oreo cookies, Ritz crackers, Trident gum. I chew that all the time. I buy cases from Costco. Hall's cough drops. Now we do see that their sales are down 15.1%. However, earnings up 233%. How can that happen? We saw about a $6 billion unusual income last year. Could have been from the sale of a division or products or something that was unusual. So make sure you understand why that is. Don't think earnings are doing that great.
Yeah, and with that unusual income, you're going to see this come down next year because it shouldn't be there. Make sure you understand what that was. Looking at the balance sheet, current ratio 0.68. Do not like that. Debt to equity 62.7% and long-term debt to equity 49.7%. The reason I pulled this out is because they have a good amount of short-term debt on the balance sheet. Now what this means is they can pay off that short-term debt. You should see that current ratio increase because that short-term debt decreases depending on how much cash they have on the balance sheet as well. So a lot to look at on the balance sheet. Make sure you understand what's going on there. Definitely want to see this increase over time if I was going to buy this company. Now looking forward, May 2017 estimated earnings per share $2.05 gives a forward PE of 21.9. So yet another food company overpriced. And as we said, to go through that market volatility, make sure you don't have an overpriced company.
Exactly. So I know this research seems like a lot. You're saying, gosh, there's so much to do. I don't have time to do it. Check to make sure your advisor's doing it. If not, that may mean, hey, maybe it's time to give us a call here at Wilsey Asset Management. We've been managing money successfully for over 30 years, doing all of this, what you see, and then some.
And then we have a lot of fun doing it too, and explaining that to our clients. You want to give us a call here, 858-546-4306, or you can contact us at our website, smartinvesting2000.com.